going to discuss national income accounting. For that, we have to know what is national income and how it is measured. Listen carefully what I am saying. Every individual is involved in raising his income so as to enable himself to satisfy the maximum of his unlimited wants within limited resources. That is the basic problem of economics. The objective of all individuals is to improve one's standard of living by the way of more and more earning. How much we earn, we will live as much as we can earn. We will live better. We will live a better life. So our objective is to earn more. Okay. In the past and even today, every individual is making efforts to earn more income. Obviously, very much obvious. We are giving our most of the efforts to earn more. Thus, income received by an individual is the reward for his contributions to the process of production. What is income? Then income received by individual is the reward for his contributions to the process of production. Okay, an individual receives more if he produces more and receives less if he produces less. In other words, more production means more reward for those who produce more, and vice versa. As much as you can produce, you will earn more, and if you produce less, then you will earn less. Okay. In the past, there was barter economy and the money did not exist. When there was barter economy means exchange economy, getting some commodities in exchange of some commodities. That is, we can get pulses we can get pulses instead of rice. That is one kind of barter economy. Okay. But nowadays, countless transactions are being conducted in the economy through money. এখন তো আমরা প্রত্যেকটা জিনিসেই প্রত্যেকটা সময়ই আমাদের কি হয়, সব সময় যে কোনো ট্রানজাকশনসেই মানি ইনভলভ থাকছে. মানি ইজ ইনভলভড ইন এভরি আদার ট্রানজাকশন, ইচ অ্যান্ড এভরি ট্রানজাকশনস. ওকে, আমরা দু একটা এক্সাম্পল দিয়ে দেখি. ফর এক্সাম্পলস, how housemakers are buying their daily needs, farms are paying wages and buying machineries, okay, taxes are being paid, and so on. Therefore, any rational way is needed to classify these transactions in a simple systematic manner. So there is a need to classify them in a rational way and in a simple manner and a systematic manner. Okay, being a student of economics, it is foremost to understand the basic concepts of national income. It is very much important you should know what is national income and national income accounts and national income accounting properly. You have to know what the things you have to know, that is national income accounts and national income accounting properly. Now we will go to discuss what is national income. There are several economists who have given definitions about national income differently. Just like economist Alfred Marshall said, the labor and capital of a country acting on its natural resources produce annually a net aggregate of commodities, materials and immaterial, including services of all kinds. Okay, that is what is Marshall saying? Marshall saying national income is the labor and capital of a country acting on its natural resources produce annually a net aggregate of commodities, material and immaterial, including services of all kinds. Next we come to the definition of PIGU. Economist PIGU, the spelling of PIGU is PIGOU. PIGU said national dividend is that part of the objective income of the community, including, of course, income derived from abroad, which can be measured in money. So, national dividend is that part of the objective income of the economy, including, of course, income derived from abroad, which can be measured in money. That means national income is the sum of monetary terms, and it is expressed in monetary terms. According to Erwin Fisher said, national dividend or national income consists solely of services as received by ultimate consumers, whether from their material or human environment. So Fisher said national dividend or national income consists solely of services as received by ultimate consumers, whether from their material or human environment. This is known as the definitions of these are the definitions given by several economists about national income right now, but all those definitions are somehow fishy, to some extent not so clear. To some extent not so clear. So to make them clear, we have to define it or find out how to define it in a simple systematic manner. So while talking about the simple systematic manner, simple systematic definition, we can say that the sum of money value of all the currently produced services and goods within an economy is known as the GNP or gross national product of that economy in that year. Let me clear again. The sum of money values of all the goods and services produced, all the final goods and services produced within an economy in a particular year is known as the gross national product of that economy of that year. Now, since all the final goods and services are measured in terms of the price level of that year, so this is known as gross national product at market price. This is known as gross national product at market price. Now, we will discuss how to find out national income, what are the different methods, and some modern economists' view. What are modern economists saying? The definition of modern economists. First, we come to Simon Kuznets. According to Kuznets spelling হচ্ছে Kuznets. Kuznets. It is the net output of commodities and services following during the year from the country's productive system in the hands of the ultimate consumers. So Kuznets is saying national income is the net output of commodities and services flowing during the year from the country's productive system in the hands of the ultimate consumers. Now come to Paul Samuelson. Samuelson said national income is the loose name we give for the money measure of the overall flow of goods and services in the economy. And the National Income Counting of India, according to National Income Counting of India, that is known as NIC, national income estimates measure the value of commodities and services turned out during a given period, counted without duplication. That means we are saying about final goods, and here it is known as counted without duplication. Okay, according to Sapiro said national income is the sum of wages, rent, interest and profit, or the sum of all goods and services produced by the economy during one income period. That one income period, mostly that income period considers one financial year. And now we are talking about the eminent macroeconomist Professor Ackley. Ackley said national income is the sum of all. Is the sum of all. What all? All means number one, wages, salaries, commissions, bonuses, and other form of things. Firstly, wages, salaries, commissions, bonuses, and other form of things. Secondly, net income from rentals and royalties. Thirdly, interest, and fourthly, profit. Okay. Now let us talk about different concepts of national income. There are several concepts. Among them, there are 10 concepts. They are most important. Firstly, gross national product. Secondly, net national product. Third, net national product at market price. Then net national product and factor cost. Then personal income. Then disposable income. Then corporate income. Then per capita income. Then real income. And then comes domestic income. There are 10. We can divide the concepts into 10 categories. Firstly, we are talking about GNP or gross national product. So, gross national product refers to the total value of final goods and services. Total value of the final goods and services produced in the economy during a given period of time. That given period of time mostly considered as 1 year. According to W.C. Peterson, gross national product may be defined as current worked value of all goods and services produced by the economy during an income period. If we express the value of total output in terms of money, then it will be called the gross national income. Okay, so in simple words, whenever we are talking about simple words, GNP is the sum total of the money value of final goods and services produced by a nation in a particular period, say 1 year. Don't miss any word here. GNP, gross national product, is the sum total of the money value of final goods and services produced by a nation in a particular period, say 1 year. So now, why we are talking about money values? Because productions are different. You may produce oil, I may produce clothes. So we cannot sum up clothes with oil. So if we want to sum up, then we have to express them as money values. I have to express my clothes value in monetary terms. You have to express oil in terms of monetary terms. Okay, then we can sum them up. That is known as gross national product. What are the features of gross national product? Then gross national product, there are some features of gross national product. That is what we can take in the gross national product and what we cannot take. That is what to include in the gross national product and what to exclude from the gross national product. Firstly, gross national product does not take into account the depreciation of goods and services during the process of production. That means depreciation does not come into account. Depreciation should not come. Gross national product excludes transfer payments. The transfer payments, so you must ask, what is transfer payments? So transfer payments are termed as transfer payments which are earned without doing any work, any productive work. That means when you are getting pocket money from your parents, that is out of kind or love. That is a kind of transfer payment. Okay, when we are paying to a beggar or a needy person for their help, we expect nothing from them, so that is also transfer payment. Okay, these are called transfer payments. Transfer payments are not taken into account as they are not involved or they are not derived from any kind of production. Only those goods and services are included in gross national product that are brought for sale and purchase in the market. It means goods and services having market value are included in GNP. That means only those things comes into GNP which are having market values. Okay, then you may ask, there are a lot of things which don't have any market value, but they are very much necessary for our living, like defense, administration. In those cases, the expenditure of the government in the defense, or the expenditure of the government on the administration is taken into account. Capital gains which occur on capital are excluded from GNP. Capital gains which occur on capital are excluded from GNP. Let us explain it with an example. Say there was a second-hand scooty. I have bought a second-hand scooty for rupees 20,000. And now, due to the lockdown, people want their own vehicle. I want to sell it, and now I am selling it on 25,000. That means I am making a profit of rupees 5,000, a profit of rupees 5,000 for that year. But this does not involve any productive activity. Only I have the scooty and you have the money. Now when I am selling it, I have the money, you have the scooty. Just exchange of resources. That should not be counted in GNP. GNP should consist only of the value of final goods and services produced during a given period. It should be listened carefully. Only final goods and services, only final goods. No intermediate goods are taken into account while we are talking about GNP. Okay, let us consider a farmer produced wheat which costs rupees 1,000. Now he sells it to a mill which makes flour from the wheat of rupees 800. Okay, and the mill owner sold the flour to a bakery and earned rupees 1,000, earned rupees 800, and the bakery made bread from it and sold it for rupees 1,000. Now if we have sum up all the things, wheat costs rupees 500, flour costs rupees 800, and bread costs rupees 1,000. That means 2,300 if we sum up. But that is not the thing. First the farmer produced wheat that costs rupees 500. Now the mill owner makes flour from that wheat. That means he or she is adding a value of rupees 300 to the above 500. And now the bakery owner is adding rupees 200, since he or she is selling the breads at rupees 1,000. That is, he or she is adding rupees 200 as value add. He is adding value of rupees 200 to the flour. That means 500 plus 300 plus 200. This is known as equals to 1,000. That what is equal to the value of final goods. That is, final good here is bread. Bread is here final good. The value of bread is 1,000. Either you have to take the value of the monetary value of the final goods, or you have to take the value added in the each step of the production. Since gross national product is measured in terms of the price level of that year. Actually, GNP or gross national production is measured during a particular period of time. Basically, we always try to measure it in a particular financial year. That means the 1st April of a year to the 31st March of the next year. That means we can say, if we are going to measure 2021's GNP, then we have to wait for 31st March of the 2022. The financial year started from 1st April 2021 and it will end in 31st March 2022. So this is GNP. So from GNP we will derive NNP or net national product. GNP includes the value of total output of consumption goods and investment goods. GNP includes the total output of consumption goods and investment goods. But the process of production uses up a certain amount of fixed capital. We have to use certain amount of fixed capital. In order to arrive at NNP or net national product, we deduct depreciation from GNP. That means therefore NNP is equals to GNP minus depreciation. Whenever we will subtract whenever we will subtract depreciation from the GNP at market price, we will arrive at NNP at market price. That means NNP at market price equals to GNP at market price minus depreciation. Let me show you how to calculate them. Calculating GNP of a country is, or GNP of an economy. GNP of an economy is the sum of some expenditures. GNP is the sum of some expenditures. We can view it as sum of some expenditures. Now you will say, what kind of expenditures? So what kind of expenditures? First expenditure is consumption. We all have to consume something to survive, so we have to spend something for that. That is known as consumption expenditure. That is our consumption expenditure. Now producers have to invest, so they have investment expenditure. Okay, now the government have some developmental expenditure for administration, to run the administration, defense, they have to spend some. That is known as government expenditure. And X stands for export. While we are exporting, we are earning. Export means our earning, that is our earnings. And M stands for import. Import means our expenditures as expenditures. Okay, now let us talk about export and import. You know what is export and what is import. So let me consider this box as an economy. As an economy, and this is the other whole world other than that country. Okay, so whatever coming into that economy, those are what are coming into this economy. That means we are importing them. Since we don't have those things, we are importing them from the other countries. We have to spend. Okay, we are buying. We are buying, so we have to spend. And now economy to the other section of the world. So we are selling. Since we are selling, so we are earning. Okay, now what remains in the economy? What remains in the economy? Some of the earnings comes in the economy and some goes out. So what left is known as X minus M. Export earning minus import expenditure is known as export, that is called export earnings minus import expenditure. Export earnings minus import expenditure. So expenditure. So that means this is known as, we can term this up as NFIA. NFIA means net foreign income from abroad. Net foreign income from abroad. What remains in the economy? Okay, net foreign income from abroad. Sorry, from ta likhte bhule gechilam. Net foreign income from abroad is known as the X minus N. So GNP at market price. GNP at market price is the sum of C plus I plus G plus NFIA plus NFIA, that is GNP at market price. Okay, now if we come to the NNP at market price, then we have to deduct depreciation from the GNP at market price. So GNP at market price, from GNP at market price we are deducting depreciation. While we are deducting depreciation, we will get the NNP, or net national product at market price. Net national product at market price. Okay, so net national product at market price, net national product refers to the net national, let me explain this more clearly. Net national product, or NNP, refers to the net money value of final goods and services produced at current prices in 1 year in a country. Let me say it again. Net national product refers to the net money value of final goods and services produced at current prices in 1 year in a country. If we subtract the depreciation charges from gross national product, we will get the net national product at market price. Now you can ask, why we have to subtract depreciation. Depreciation refers to the loss of value suffered by nation's stock of fixed capital through wear and tear. What is depreciation? Depreciation refers to the loss of value suffered by nation's stock of fixed capital through wear and tear. Generally, during the course of production, depreciation charges are made for renewal of plant, wearing out, and obsolescence of capital equipment, etc. Generally, during the course of production, depreciation charges are made for renewal of plant, wearing out, and obsolescence of capital equipment, etc. If we avoid such allowances, production will decline in the following year. If we avoid depreciation charges, or we are not ready for that, then the production will hamper in the next year. Thus, net national product is the net money value of final goods and services produced in the course of a year. Okay, so net national product is at market price is GNP at market price minus depreciation. So, what are the merits of a net national product? Net national product stresses the long-term significance of maintaining the productive capacity of the economy. Listen carefully. Net national product stresses the long-term significance of maintaining the productive capacity of the economy. Secondly, net national product depicts the net increase in total production over and above current consumption and current replacement investment. Net national product depicts the net increase in total production over and above current consumption and current replacement investment. The concept of national product is extremely useful in studying the economic growth. How an economy is growing, or how is an economy performing, that can be shown through the year-wise net national product of an economy. Net national product clarifies the long-run improvement in physical productivity of capital. How the capital will be more and more productive. How can we make capital more and more productive? That can be assured from the net national product. It also useful to analyze the net increase in total product. How much the total product increased in a particular period of time or decreases, that can also be depicted by net national product at market price. Next, now we will talk about net national product and factor cost. Net national product at factor cost. I will discuss this in two types. Okay, net national product in factor cost, net national product at factor cost. What is factor cost? FC means here, FC means factor cost. Now you must ask, what is factor cost? Factor cost means prices of intermediate goods, prices of factors of production, prices of factors of production. So and now factors of production, we know there are 4 types of factors of production. 4 factors of production, land, labor, capital, and to organize them or coordinate in between land, labor and capital, organization. Those are the 4 factors of production: land, labor, capital, organization. Now for the land, earning is rent. Land earns rent. Labor earns wages. Laborers earn wages. Capital earns interest. And organization earns profit, or earning of organization is profit. So if we sum up those things, rent for R, wages for W, interest for small I, and profit is given by pi. Now if we sum up this, then we will get national income. National income is the summation of rent. You have land, I have land, I have rented it out, you have rented it out. So all the rented out lands, the landowners will get some rent. The sum of their rents, sum of all the wages and salaries, and sum of all the interest, and sum of all the profits earned in a particular period of time is the national income of that country. National income of that country, of that economy. Okay, so this is known as NNP at factor cost also. NNP at factor cost also. This is also known as NNP at factor cost. Why factor costs are different? Why factor costs are different from prices of the goods? Since market price of an commodity may include sales tax or other taxes or subsidies. either sales tax or taxes or subsidies. Everything may include. Okay, but no, if there is tax, then market price will be greater than the factor price. Market price will be greater than the factor price. Okay, and if there is subsidy, like we are getting subsidy on LPG, light petroleum gas, that is cylinder subsidy. If there is subsidy, then market price will be lesser than the factor cost. So since market price consists of either tax and either sales tax or subsidies, so market price does not depict the actual picture. Actual picture is depicted by the factor cost. So we are measuring this NNP at factor cost at income method. We can find out that net national product at factor cost and in another way, that is NNP at factor cost. While we are counting NNP at factor cost, first we are going step by step. First we can calculate GNP at market price. Let me show you in some different ways, summarize then. Firstly NNP at market price. From that we should strike out the taxes. Those taxes are indirect taxes. Those are known as indirect taxes. Direct taxes are not counted. Taxes and plus subsidies. Subsidies should be added. Subsidies are added and taxes are subtracted. We can say that at NNP at market price minus tax minus subsidy. Tax minus subsidy, and in other words we can say that as NNP at market price minus net indirect tax. This is known as net indirect tax. Okay, I hope you understand what is NNP at market price. Now we should know what are the constituents of an NNP at factor costs. What are NNP at factor cost consists of? The chief constituents of national income at factor cost are as follows: all wages, salaries and supplementary earnings by employees for their productive services. So firstly we should sum up all wages, salaries and supplementary earnings like bonus by employees for their productive services. Then we sum up net rent of all individuals, included imputed rent, net interest paid to all individuals, plus net profits of all kinds minus transfer payments. Then how we will derive NNP at factor cost? That means we will sum up all wages, salaries, supplementary earnings by employees for their productive services, plus net rent of all individuals, included imputed rent, plus net interest paid to all individuals, plus net profits of all kinds minus transfer payments. Then now you may ask, what are the relation between NNP at factor cost and NNP at market price? The relationship between net national product at market price and net national product at factor cost can be discussed under three categories, like indirect tax, subsidy and government surplus. Let us talk them about. The phrase at factor cost is to be contrasted the phrase at factor cost is to be contrasted with that of the market price. Factor price contrasts with market price. Goods that are produced in an economy are brought for sale in the market. When these goods are sold in the market, then buyer changes the market price. and the tax is levied by the government. Thus, the market value of product exceeds the income paid to the factors of production by the amount of indirect taxes. Therefore, NNP at factor cost shows the income actually received by the factors of production. If we deduct the amount of indirect taxes from the money value of NNP at market price, we will arrive at NNP at factor cost. Therefore, NNP at factor cost is equals to NNP at market price minus indirect taxes. Now if we talk about subsidy refers to an aid in terms of money. It causes the market price to be less than the factor cost. It causes subsidy is an aid. Subsidy is an aid or help in terms of money. Subsidy is an help in terms of money. Just a minute. It causes the market price to be less than the factor price. It causes the market price to be less than the factor price or factor cost. Okay. For instance, suppose a cloth is subsidized at the rate of rupees 20 per feet and sells at rupees 100 per feet. Thus, while the consumer pays rupees 80 per feet, the factors of production will receive rupees 100 per feet. Rupees 20 is subsidized by the government. That is, so to derive NNP at factor cost, we have to include subsidy with NNP at market price and then subtract the indirect taxes. Now, government surplus. Sometimes government render productive services and earn profit. Like rail earns profit or ONGC earns profit. These profits by the government must be deducted before we find out the NNP at factor cost. It is due to the reason that these profits do not go to the factors of production but are deposited in government treasury and therefore not be deducted. So, to find out net national product at factor cost, we have to subtract. We can summarize as NNP at market price plus subsidy minus net indirect tax. Okay, or এরকম ভাবেও লিখতে পারি আমরা NNP at market price minus indirect taxes plus subsidy. That means NNP at market price minus indirect tax plus minus subsidy. And or else we can write it down as NNP at market price minus net indirect taxes. Now we will talk about personal income. What is personal income? Personal income means an income received by the individuals of a country in a year from all resources. While we are calculating our income tax, we summarize our incomes. So, like an individual earns in an year from all the sources is his or her personal income. Personal income is never equal to national income. It must be remembered that national income is never equal to national income. This because it includes transfer payments, whereas in national income these are excluded. That means transfer payments are excluded from the national income, but transfer payments are included in the personal income. Listen carefully. National income, transfer payments are included. Transfer payments are included in personal income, but transfer payments are excluded from the national income. Okay, thus they include. So personal income includes the wages and salaries, interest, rent and dividends received by individuals. Moreover, they also include the mixed income of self-employed persons like farmers, shopkeepers and barristers, doctors, etc. Privately practicing doctors, etc. The Professor W.C. Peterson has defined personal income is the current income. Personal income is the current income received by person from all sources, including transfer income from government and businesses. That thus personal income is the current income received by received by person from all sources, including transfer income from government and businesses. So we can jot down what is personal income. So to write down what about personal income, we can write down it as follows. Personal income. To find out personal income, we will go through national income. National income means NNP at factor cost. We have find out how to calculate NNP at factor cost. Okay, then we will add up transfer payments. From that, we will subtract undivided corporate profit. A part of corporate profit goes to the people of the share, goes to the shareholders as dividend, and the rest of the profit goes to the reserve fund, capital reserve fund of the company. So that is undivided corporate profit. That part of the profit, corporate profit, which goes to the capital reserves of the fund, is known as undivided corporate profit. From that, we have to minus corporate income tax. Corporates have to pay taxes for their profits, corporate income tax. And from that, we have to deduct social security contribution. Then we will get personal income. How we will derive personal income? Then that means to calculate personal income, first we have to calculate NNP at factor cost, then add up transfer payments with that, then deduct undivided corporate profit, then deduct corporate income tax, and then deduct social security contribution. And now we are talking about disposable income. Disposable income means that part of income which we can spend. Now you may ask, we can spend all the income earned. Not that. Some of our income we have to pay as some of our incomes we have to pay as income taxes. That is called direct taxes. So disposable income means personal income minus direct tax. Personal income minus direct taxes, or in other words, disposable income can be termed as disposable income can also be found out from consumption expenditure, from the sum of consumption expenditure of an individual, with that savings. The sum of consumption expenditure is savings is the disposable income. Either you have to deduct direct taxes from personal income, or you have to sum up consumption expenditure and savings together to find out disposable income. Okay, now we will talk about corporate income. Okay, corporate income. What is corporate income? Corporate income means income and profits of companies or public corporation. Corporate income means income and profits of companies or public corporation. If we deduct the income tax and profit tax, it will give us the corporate income. That means the profits and income and profits of a public corporation or companies are corporate income. To find out net corporate income, we have to deduct the income tax and profit tax. Now, what is per capita income? Per capita income. After disposable income, we talked about corporate income. Corporate income. After that, we are talking about per capita income. Per capita income, or it is known as PCI also. So per capita means per head income. per head income. So since it is per head, so this is an average averaging method. This is an averaging method. Okay, this can be known as an averaging, better to say an averaging term. Okay, per capita income is an averaging term. How to find out this per capita income? Per capita or per head income means আমাদের per capita income, I am writing it down as PCI. PCI equal to national income of a country divided by the population of the country. National income of a country divided by the population of that country is known as per capita income or per head income of the economy. Per capita income or per head income of the economy. Now, per capita income of a country may be defined average earning of an individual in a particular year. It refers to the income received by an individual in a certain year in a country. Generally, the concept of per capita income refers to the measurement of income at current prices and prices of base year. When you are if you have done index number in mathematics or statistics, then you know what is price base year. While we are calculating the price level, we are taking 2 years, one is current year and another one is base year. Now, while we are talking about the inflation rate is going around 12% nowadays. So in comparison to the price level of 2015, it is said if inflation rate of 2021 is 12%, then it is said that the prices of all the commodities have gone up by 12% in comparison to the year of 2015. Okay, generally the concept of per capita income refers to the measurement of income at current prices and at the prices of base year. Okay, this is what we calculated here. This is at the current prices. This is what is shown here. This is at current prices. Now we will talk about private income. Private income. What is private income? Private income refers to the income obtained by private individuals. Private income refers to the income obtained by private individuals from any source, whether productive or unproductive. Private income refers to the income obtained by private individuals from any source. It may be productive or it may be unproductive. It can be derived from NNP at factor cost by making certain additions and deductions. We can find out private income from the national income. We can find out private income from national income. How to find them out? Let me show. Private income. Let me show private income. To find out private income, first we have to know what is national income, that is net national product at factor cost. It can be termed as NNP at FC also. Either you can write down it as national income or NNP at FC. Add up transfer payments. Since it is the income of a particular individual, so we are adding up transfer payments. We are adding up interest on public debt. Sometimes government sells bonds and that bonds like Indira Bikash Patra, Kishan Bikash Patra, we are paying some rupees now, and for a certain period of time we are getting back some returns, and after the maturity period we are getting back the original sum. So that is the through those bonds the government takes loan from us. So the government, whenever the government pays interest year by year, that comes up to our income. So it is interest on public debt is to be added, minus social securities. Everyone has some social security. Have some, every individual or every corporate have some social burden. So they have to pay some social securities. They have to pay for some social securities. Okay. Now, profits and surpluses of public undertakings, since they goes to the government, so they are not comes into account of the public. Profits and surpluses of public undertakings